Welcome, and thank you for joining this webcast. This is one of a number of webcasts we are making available for businesses as we aim to provide support during the coronavirus crisis and beyond. My name is Paul Gordon, and I'm the Managing Director of the SME and Mid-Corporates business within Lloyds Banking Group. And I'm joined today by Richard Brown, who is the Head of Lending within our Commercial Banking division. Now, while you're all working hard to keep your businesses operating under these really difficult circumstances, I want to reassure you that we are also doing everything we can to provide continuity of service and additional support to you, our clients, through this outbreak and beyond. And this webcast will focus on practical guidance around the range of UK government-backed lending schemes available to businesses, including the Bounce Back Loan Scheme, the Coronavirus Business Interruption Loan Scheme, as well as the Coronavirus Large Business Interruption Loan Scheme. Richard will be talking to you about the details of each of those schemes, but firstly, I wanted to highlight some of the key areas of support directly available from us, and then we'll go on to share some examples of how our relationship teams have worked with clients to help secure funding that they needed to operate through the current environment. So, we've got in place £2 billion of arrangement fee-free finance that's been made available for businesses like yours, which could provide additional finance to overcome impacts on your cash flow or your supply chain, or to support where you've got high staff absences. The financial support available includes no arrangement fees for new overdrafts or overdraft limit increases, no arrangement fees for new or increased invoice finance facilities, capital repayment holidays on loans for businesses that have been severely impacted, and repayment holidays on asset finance facilities for businesses impacted by coronavirus. Please speak to your relationship manager to discuss the support available. I'd like to take the opportunity to bring to life a recent client example of how we have supported businesses in this COVID-19 environment. This case study is William Lee, a business in the Northwest. They're a flooring specialist company, and they play a crucial role in the construction of temporary hospitals around the country. They actually specialise in laying screeding, that kind of smooth level base that supports the final floor layer. They helped to transform the Manchester Central Convention Centre into the NHS Nightingale Hospital in the Northwest. And they were brought in to carry out what was a week's worth of work to get done in just 48 hours, which is phenomenal, and it shows how companies have pulled together to deliver these crucial projects and to support the national effort. From our perspective, we supported them with a six-figure CBILS loan to support their working capital needs. Both Paul Stout and Duncan Richards in the Northwest relationship team, they worked quickly and very proactively across various teams to deliver the support to William Lee. And Colin Jones, the director of William Lee, he said, to keep trading in this manner would have been difficult without Lloyds Bank's help and guidance. It's been great to be able to help William Lee to support the national effort so directly. And now I'm going to hand over to Richard. Richard's going to talk you through the different UK government funding schemes that are available to businesses.
Thank you, Paul. So today we're going to talk to the three main schemes that are available to support customers who are impacted by COVID. What you see before you just now is an overview of the three schemes that we have, the Bounce Back Loan, the Corona Business Interruption Loan Scheme, and the Corona Large Business Interruption Loan Scheme. We'll start with the Bounce Back Loan. Bounce Back Loans are the newest of the schemes to be introduced by the British Business Bank, and arguably the easiest to access for customers. The Bounce Back Loan provides a 6-year fixed rate loan for customers who are impacted by coronavirus for loans up to 50k. When you're thinking about a Bounce Back Loan, a couple of important things to be aware of. The first is you will pay no interest on your Bounce Back Loan for the first 12 months. That interest payment is covered by the government under something known as a business interruption payment. Secondly, there is a capital repayment holiday for the first 12 months of the loan as well. And combined, they effectively mean that there will be no payments made on the bounce back loan for the first year of your 6-year loan. And that is specifically to help you from a cash flow perspective at what is a significantly difficult time given the coronavirus and the impact on customers. A couple of things to be aware of when we're thinking about the bounce back loan in relation to eligibility. So who can apply for bounce back loan? So the first thing is that you should be a UK company trading in the UK and you need to be impacted by the coronavirus. Second point is that there's only one loan available per group customer. So if you have a number of companies within a single group, only one customer within that group can actually take the loan. And as an extension of that, you cannot have a bounce back loan and a Corona Business Interruption loan. The next point is that you should not be bankrupt or undergoing any form of debt restructuring at this point. If you are, please do, however, speak to your bank. We do have a range of other options available for you. But for eligibility for the bounce back loan, you cannot be bankrupt under the eligibility rules. The final point probably to make in the bounce back loan is that the purpose of the loan is to support customers who are impacted by the coronavirus at this difficult time. Therefore, the loan should be used to provide economic benefit to the company, i.e. the proceeds of that loan should be used to help customers get through this difficult time, not for personal purposes, not for transferring to other customers or other companies within there, i.e. it should be for your own use within the company to help you at this difficult time. In terms of accessing the loan, as I mentioned, this is perhaps the most accessible of the three schemes, and that is because it has a digital onboarding channel. To access the loan, please do just access the website. There's good headline details within there, and the digital process to take you through the onboarding channel from that. Timescales are very quick. We expect to fund you within 24 hours, and therefore it is the most successful of the three loans. Moving on to the Corona Business Interruption Loan Scheme. This is actually the first of the three loan schemes that were launched by Treasury and launched back in March of this year. The scheme is designed to provide, similar to the bounce back loans, the scheme is designed to provide cash flow to customers in the form of a loan to help them through this very difficult time. It is available across a number of variants, overdrafts, asset finance, however, from Lloyds Banking Group's perspective, we have provided the term loan variant, noting that that is reflective of the customer demand that we see coming in from this, i.e. we hope to help as many customers as we can with this. From a loan perspective, you can get a loan from 50k up to £5 million. You can take multiple loans within that as long as the cumulative amount is not larger than the £5 million limit within there. There is no arrangement fee. Similar to the bounce back loans, you will pay no interest for the first 12 months. That is covered by the government under the business interruption payment. Similarly, you will have a 12-month capital repayment holiday. And again, similar to bounce back loans, that is specifically designed to help you through this time of impact so that there is no payments required on that loan for the first 12 months. Loans are available from 1 year up to 6 years. So unlike the bounce back loan, which is a 6-year variant only, you can vary the tenor over that period of time, dependent on your needs, dependent on how long you will need that funding for. And it's important to stress within this, there are no early repayment charges should you wish to repay the loan early. Similar to the bounce back loan, there are a number of things to be aware of in terms of eligibility. And the eligibility for Corona Business Interruption Scheme is slightly more involved than the bounce back loan scheme. And that, as I'm sure you can understand, is because there are larger amounts of funding available for customers here. So similar to the bounce back loans, you must be a UK company based in the UK with a maximum consolidated group turnover of £45 million. The purpose of the loan, similar to the bounce back scheme, should be to help you through this time of crisis. So again, it's not for personal use, it's not for transfer to other customers, it is there to help you at this time of need within there. It's important to know that certain sectors are ineligible within this. So banks, insurance companies, and public sector are ineligible for the scheme, and there's a full list of that information available on our website to support you. The biggest change, though, between the bounce back loan and the Corona Business Interruption Loan Scheme is probably around the undertaking difficulty and viability aspects of that. So what does that mean? So for a Corona Business Interruption loan, There are a couple of tests that customers must satisfy, and these are part of the scheme rules in order to qualify for it. The first one is known as undertaking difficulty, and in simplest form, this is where customers would effectively attest that they are not in financial difficulty at this time. Now, appreciate it's a very difficult time more generally within there, and that is taken into account as part of that assessment. And again, relationship managers can help you with the understanding of that, and there is full information on the website. I would encourage you to have that conversation. And the second, very importantly, is viability. Now, from a viability perspective, what the scheme is asking people to understand is your business a viable business outside of the impact of Corona? I've had a lot of questions around, how do we assess that? And it's very important to note this is looking at businesses that were viable prior to the coronavirus, not, the impact of that. We will consider ongoing serviceability and so on and so forth as part of the assessment, but the critical part here is, were you viable before the corona impact? Now, assuming you're eligible, you have do qualify under undertaking difficulty and that you do qualify under viability, then we will be able to take you through that credit risk assessment and hopefully be able to support you in the loan and support your business over this period of trouble. The third and final one to touch on is the Corona Large Business Interruption Scheme. Very similar to the Corona Business Interruption Scheme, but for larger customers. This is for customers with a consolidated turnover of 45 million plus, i.e. for the Corona Business Interruption Loan Scheme stops, the large scheme kicks in. Very similar structure. It is there to support customers. However, a couple of points of note. So first of all, the amount that customers can borrow is from 5 million and it's now up to 200 million. Previously, at the previous launch point, it was up to 50. It's just been extended as a sign, that the government and the banks do continue to want to support customers in this space. It has been extended up to the 200 million mark. It's available for loans up to 3 years, so slightly shorter period, which is reflective of the average funding cycles that we do see in the larger space. And one final point, unlike the other two, so the bounce back loan and the Corona Business Interruption Scheme, there is no business interruption payment on this, i.e. customers will not receive the first year effectively interest free. However, as with all of these schemes, there is a government guarantee which sits within the background, and the benefit of that guarantee is featured within the pricing, which makes a big difference, particularly in that large space. So you will see the benefit of that structure coming through in the pricing to help you over this period of time. Before we finish with two final points, one is just to stress, these are loans from the bank to you as customers. You do remain liable for the loan within this. And then probably two, we are here to help. These schemes are specifically designed to support customers at a really difficult time. We understand that, and we are very, very keen to support you through this journey. Therefore, if you do have any questions, please do speak to your relationship manager. If I could now pass back to Paul. Thank you.
Brilliant. Thank you, Richard. That's a really helpful overview of the different funding schemes, so thank you for that. I hope everyone's found the content useful. We've had the summary there of the government schemes. There's also, obviously, the £2 billion COVID fund that I referenced at the beginning of this call. That's available as well. I'd encourage you to please speak to your relationship manager to talk about the support that's available. As Richard says, we are here to help. We recognise that there remains a high degree of uncertainty and that these are challenging times. I'd also want to direct you to a number of useful links to additional resources that are available on our website. And these are highlighted on the slide now. You can also follow us on LinkedIn and Twitter. And to share your comments or feedback, please use the hashtag webcasts. I hope you found that useful. Thank you for listening.